I'm Nidhi Sinha, editor Outlook Money, and I have with me Mr. Vijay Chandok, MD and CEO of ICICI Direct, who will help us explore what's in store for 2024, where the opportunities lie, and where you need to tread with caution. Welcome, Mr. Chandok.
Thank you so much. Hello, Nidhi. Hello to all the viewers, and thank you for having me for this show.
Yeah. So we were talking about elections. 2024 is going to be the general election year, and usually we see that there is a lot of market volatility during the election season. So how do you foresee the markets will behave this time around?
Well, indeed, we are coming close to the elections, and we've seen that generally when there's a run-up to elections, the policies are such that there are multiplier effects that come into the economy. You find that the government spending is quite robust, and all of that leads to consumption. So consumption tends to be on the higher side. But this time around, as we are looking at the system, what we find is that we are coming on the back of an slightly inflationary environment.
Right.
And the consumption this time around is slightly different from the kind of consumption pattern we've seen in the past.
Yeah.
Typically, it's the auto, fast-moving consumer goods, the consumer durable segment which gets impacted positively. This time around, it's interestingly autos which are getting positively impacted, and not so much the FMCG. The FMCG still is flat. So in some sense, the consumption is a K-shaped kind of a consumption recovery that we are seeing. So that's one component of something that one can see just now and is expected to continue to see. The other thing is that rural side of India tends to consume much better, and we started seeing that visible in the numbers.
Right.
And going forward as well, I think two-wheelers, rural consumption, as well as auto consumption, that elements of growth are expected to continue.
So definitely you've mentioned the auto sector and consumption as the big sectors to watch out for. Any other sectors that investors should really look out for during the election season?
Not just elections, but I would probably extend it slightly for a longer horizon and predicate it on two things: the stuff that's going around in the world around us, as well as some of the measures of reform that the government has sort of implemented in more recent past.
Right.
I think that's throwing open some very, very interesting opportunities into new segments. Some of the segments that we are quite excited about is the entire energy transition segment, the clean energy space, the renewables.
Right.
I think there is some very interesting growth that one can expect going forward. Data sciences, data centers, APIs, that's another very interesting growing field, new field. Then we are clearly seeing that some of the PLI efforts is leading to growth in the electronics manufacturing segment.
Okay.
So that's another new segment and growth opportunity. And let's not forget the spend that government is doing towards modernizing railways, indigenizing defense, modernizing defense. So defense sector, railway sector, I think there's a whole network that will be a beneficiary of this.
Infrastructure largely.
Absolutely.
Okay.
Telecom, given the kind of consumption the young Indians are doing all the time on their mobile phones,
Yeah.
I think that's an area of continued growth, and it will probably keep going for a period of time. Similarly, power, I think that's an area that has been one area where there has been a little bit of a confusion, but as economic momentum and growth is taking place, it's becoming clear that apart from renewables, I think the traditional areas of power is also going to have growth momentum. I think they can coexist for a period of time. So places which have underperformed for a long period in the past are beginning to see traction, and we expect that traction to continue. And finally, let's not forget banking.
Yeah.
I think that's an area which has got lots of legs to still continue.
Okay. So we are talking about sectors, but what about the global effects that sectors may face? There are wars going on, and there are all sorts of geopolitical events that affect the Indian economy as well. So from that perspective, what would you suggest?
No, indeed, I think one needs to recognize and understand markets are fraught with risks, and some of the risks that one needs to keep at the back of mind at this current time is that it's not just domestic factors that impact markets, but also global factors. You specifically mentioned, political sort of unrest that's going on in the Middle East. You spoke about the war and so on. Typically, we find that when there is some kind of these type of events taking place, commodity prices, oil prices typically tend to spike. I think fortunately we are seeing that the impact of these factors, at least in the immediate term, looks to be minimal, which is good for the Indian economy. So while one needs to keep watching the situation as they evolve and be conscious and cognizant of the fact that that could have an impact on economy and eventually the markets. At this point in time, it still seems to be a factor which is under control, at least as far as markets are concerned. So keep watching, but don't get scared just yet.
Okay. So the market is a long-term bet, like
Indeed.
you were saying. So these short terms will come and go. But the other thing that has been in the news for most of 2023 is this rally in mid-cap and small-cap stocks when we talk about the categories. So what are your views about that? Because the valuations may be not in sync, or you may explain better.
Yeah, so mid caps and small caps, particularly in the last, I would say, year or so, 9 months or thereabouts, has seen a great rally. And this question is often getting asked whether that is justified, whether it is, got fundamental support.
Right.
But when you really dissect and go into depth, you do find that the legs that this segment has sort of got is largely on account of earnings re-rating. So it's fundamentally driven. And this earnings re-rating has come because of margin improvements. That's happened because of capacity utilizations going up. We've also seen that most of the companies have got much cleaner balance sheets, debt levels are low, they've been deleveraging in the last several years. So the benefits of that is accruing as well. So overall, it's on the back of improved, I would say, profit profile of the mid and small cap companies. So what does it mean now? I think in the immediate term, one needs to understand that having rallied by what it has, which is quite significant in a short period of time, there is always a risk of, particularly at the levels the markets are, some kind of a pullback, some kind of a volatility. And we notice that typically mid caps and small caps tend to be lot more volatile than the larger cap companies. And if there is a pullback of the markets for any of the risk factors, either domestic or global, there will be probably a sharper pullback in the mid cap and small cap as compared to the large caps. So one needs to be cognizant of that. But given the medium term prospects of India as an economy, as a growth story, it is inevitable that this growth will also be benefiting the mid and small caps.
Okay, so there is hope, because with
Indeed,
the market
there's
touching
more
70K,
hope. Indeed.
Yes. you kind of become cautious because everybody is going in that direction. There is
Indeed, I just want to clarify that one needs to be cautious at the current levels.
Okay.
But that doesn't mean that you're done with the growth momentum that this sector can offer in the more long term.
Right.
You've got to probably keep watching for certain corrections. So it could be great opportunity to buy on corrections. It could also be great time now to identify those specific sort of growth stories which have been not yet caught on to the rally as much as some of the others have.
Okay. You did
there are going to be gems that one can find still.
Yeah, that is great. That is very hopeful for our audience, that there are still gems in the small cap and mid cap space, but you need to be cautious. So you did mention the banking sector. Could you tell us a bit more about what's the potential in the future? Because that's something that is much watched for.
Indeed, banking sector is a very large and important part of the entire market composition. I think in the last few years, we've seen big cleanup that's happened in the banking space. Currently, almost every bank is sitting on a clean balance sheet, strong capital, growth has been good. And that's also reflected in the recent, I would say, in the more medium-term rise in the market valuations of most of the large banks, some PSU banks as well. But the question really is, what next from here, and whether there are more opportunities for growth for this segment. We certainly believe as a house that there's a lot more growth that will come, particularly amongst the large cap and some of the large cap PSU banks. And there are at least 3 or 4 important drivers for growth from here. One is this whole new to credit segment. I think that's a very interesting segment for the banking system to embrace and expand their business into. And as economy expands and as affluence grows, this segment will continue to provide great amount of bottom of the pyramid momentum for the banking system. And a related opportunity which is becoming large and will continue to become even larger in the next few years is the trend of growing affluence amongst the already affluent people. And that's going to, and we're already seeing that, and probably the momentum, as I said, would accelerate, going to lead to big opportunities in the wealth management, private banking space. For the entire financial system, investments, savings, and so on and so forth is going to grow quite rapidly. So that's the second sort of opportunity for growth. The third opportunity for growth is we spoke about the mid caps and small caps, so the MSME and the SME space, because this space is truly understarved for capital. They're always looking for growth capital, for loans. So this is another segment which can provide good amount of momentum. We are seeing as economy expands, one of the big beneficiaries in most expanded economies, and a very large part of most expanded economies, is the SME segment. So I think India is going to be no different. We will have a larger play and role of the SME space. So that's the third driver for growth. And let's not forget the digitization move that the whole country is experiencing, all businesses are experiencing. The banking system will be another big beneficiary of the effects of efficiencies that digitization, growing digitization in this space.
Because it has embraced it big time.
Indeed,
also.
It's one of the early embracers and the leaders in terms of using technology and digitization. So, and there's a lot more happening, Gen AI and so on and so forth, and how those models, growth in analytics, how all those models can be integrated into business efficiencies, new opportunities, and provide bigger growth momentum. So at least 4 large legs is what I believe that the banking system has still got great potential to harness. So I think we remain very optimistic of the medium term story in the banking space, even given where we are at this point in time.
So another theme that is emerging in India and in fact globally also is ESG. With increased focus on green energy, clean fuel and other things like that. What is the scope of investments in that space right now?
So ESG is a relatively new term but growing rapidly. ESG is relatively a new concept but growing and gaining more acceptance rapidly. From our side, what we clearly see is more and more investors are integrating ESG frameworks into their investment and selection processes. We, amongst the services we provide to investors, is our research services, and we clearly find that these investors are demanding us providing ESG ratings and ESG stance of companies as a part of our research.
So it is picking up in that sense.
No, in fact, the demand is growing. Investors are asking, they are sort of factoring in ESG considerations into investment making. In fact, going forward, we probably are going to see more and more ESG focused funds. We are already seeing ESG focused funds in the market. So more and more ESG focused funds which will invest only in companies which meet the minimum standard as far as ESG is concerned. So it's an area that no corporate can sort of ignore or sidestep. it is going to become an important part. We are already seeing as a part of the whole movement in India, large companies embrace ESG very sort of closely into their businesses and business models.
But do you also see it as the next big story? Because
I certainly think it's going to be an important next story. I wouldn't sort of single out and say this is the only big story, but certainly it's an important, one of the important stories emerging. Particularly if you see, within ESG also, we've recently had the COP28, and more of this transition of energy is becoming important. And therefore companies' commitment to net zero is one relatively newer element getting incorporated into ESG.
Right.
So even ESG is getting a lot more sophisticated, a lot more sharper as time evolves. Inclusion and diversity is another element gaining greater prominence amongst ESG. And finally, voluntary disclosures. How much of steps that the company takes on its own beyond what is customarily required or legally required or regulatorily required to disclose is a factor which is growing prominence. And we do find investors are going to give more and more importance to these elements of ESG for making their investment considerations.
Okay. So another theme that we have talked about many sectors that where the opportunities lie for investors. Are there something that they should watch out for, especially during this phase? Now we are at the end of a year and starting in a new year. So, there are a lot of investors who think about these things at these junctures.
So, in the particularly post-COVID, we've seen some very interesting and different trends in the markets. One of the trends is that we are finding investors coming into the markets getting younger and younger. That's clearly a trend. The second is the use of digital medium to participate in markets, access markets, and also trade in markets is becoming almost omnipresent. The third trend is that we are finding people from some of the smaller cities and smaller towns come and participate in large numbers. And what is intriguing really is that a lot of these newcomers are taking to trading as a way of participating in the markets, and they are very enthusiastically coming into the markets in large numbers, and I really worry about that. So if you ask me what one should watch out for is people thinking of mistaking investing to trading,
right,
and mixing it up. In fact, I'll lean to a report which SEBI had come out recently, and SEBI clearly said that in that research report that they came out with, that 90% of the people who are trading in FNO are landing up losing money. And we find this trend to be growing, and I really feel concerned about this. So from our side, I would only say investment is fraught with risks. Investment is, and one needs to recognize that. Investment is a long-term game, and one needs to factor in that and be patient. Investments require people to define their objectives. They should be clear. What am I trying to achieve out of my investment? What are my goals out of making some investments into the markets? And once these factors are sort of appreciated and understood and absorbed, then it's important to define what is my risk appetite. How much do I feel comfortable losing money or dealing with volatility? I think specialists like us help people, think through these matters and make what one would call loosely an investment philosophy, an investment framework. And our investment framework is long-term in nature. It is wealth creative in nature. It is expected to meet the objectives of that investor. And it typically leans on the philosophy of asset allocation. So you decide based on risk appetite and objectives how much money to put in different asset classes, and continue to provide inputs on inter-se movements as market conditions change. So think of it more like this. I spoke about trading. Is trading important? I think investment is important, and one should think of trading more as a tactical play.
Okay.
So you create your core portfolio in a more long-term asset allocation framework model, and think of trading as something which is satellite to your core portfolio, because there will be tactical opportunities, momentum opportunities to harness, hedging of risk to harness. Use trading by and large for that, and probably you'll probably get the best of both worlds.
Yeah. So finally, sir, you've been talking about how youngsters have taken to trading, but a lot of them, especially post-COVID, it became more like gaming, because people were busy with their phones and doing that, and hardly anyone did the tactical allocation that you are suggesting for them. So for them, sometimes you think the youngsters, they may not be able to think of these long-term goals like your retirement or things like goals that are very far for them. So what is your advice for that section?
You actually spoke about a very close to my heart subject. You spoke about retirement. I certainly think retirement concept as a concept is never thought the way it should be thought in our country. There are probably a few reasons for it, that you may always believe it is like far out into the future. It's not for me. But one needs to recognize and realize that that's going to happen some day in your life. And one needs to plan for it, to have a peaceful coexistence. Let's not forget that longevity in this world is improving. In India, it's improving. And therefore, probably you would have a lot of years to live beyond your retirement age, your active age, where you're working and earning money. And the money that you earn during your active working age is what is got to support you and your entire setup for a large number of years. One needs to plan for that. Right. And I do believe there's a big gap. So first point, there's a big gap in this understanding, appreciating and planning for retirement. Apart from thinking that it's far out, I think even we probably in the market do not have appropriate instruments which help you think. Some instruments that have sort of masqueraded themselves as retirement instruments actually are suboptimal in their eventual outcome. So one needs to therefore, when I say suboptimal, in isolation suboptimal. You have to think of it more like a package rather than thinking of it as singularly with that instrument. And therefore, one needs to think about investment at a reasonably early age. Ideally, I would think 35 to 40. Okay. When nobody thinks of retirement at all, is the right time to start, because you'll get the effect of compounding. You'll get at least 15, 20 years of active investment and the effect of compounding to take care of your golden years after retirement. So the age when you start, 35 to 40 is an ideal age. Many people don't do this. And more so people who are in finance, I find that they are great in managing money for others, but when it comes to themselves, they actually just don't pay enough attention. I personally wish I had also started earlier in life, but I did start in my late 40s, better late than never. But I would strongly advise people to start investing at 35 to 40 years of time. Think of it as a basket of products which have that ability to provide you in the long range. And I would believe that it's important to take the help of experts, factor in the effect of inflation that will happen in future, factor in medical expenses that today you don't even think of, which is going to be so much higher and so much more expensive than what probably today we are used to. So investment planning is about planning for cash flows, planning for medical insurance, planning for your corpus itself being sort of contained and grow. And also one needs to think about legacy transfer. What will you transfer to your next of kin once you're no more? So it's a comprehensive sort of way of looking at it. It needs planning. It needs early start.
Thank you so much, Mr. Chandok, for your insights, and our viewers, I'm sure, will benefit a lot. They have a whole range of sectors that have been, recommended in a way, and best of luck for your future planning.